Welcome back, Focus Learners. Today, we have an incredibly practical explainer lined up for you. We are looking at the landscape of turnkey investing in Kansas City for the year 2026. If you own or are considering rental property in the Kansas City metro, you are absolutely in the right place. Before we really get going, I want to explicitly state that this content is strictly educational. It does not constitute legal or tax advice, so please consult your own professionals for your specific situation. Okay, let's dive into this authoritative, practical, and data-driven analysis of how turnkey investing actually works in this market.
Here is our roadmap for today. We are going to cover the turnkey appeal, the 4 steps to turnkey, avoiding mistakes, verifying your deal, and partnering for success. Let's jump right in.
Section 1. The Turnkey Investing Appeal.
Let's set our baseline right off the bat. Turnkey real estate investing basically means buying a rental property that is already renovated, often already leased, and completely ready for a property manager to operate from day one. You are buying a move-in ready asset built to be hands-off. It effectively removes all that rehab work and the leasing hustle right off your plate. For an out-of-state investor who wants exposure to strong cash flow without having to fly in to oversee a construction crew, this is really the ultimate entry point.
So why Kansas City? Well, it stands out as one of the top turnkey markets in the entire country for a few distinct reasons. You've got home prices well below the national average, paired with very healthy rental rates. That affordability makes the math actually work out, but the regulatory environment is just as crucial. The Kansas City metro spans across the state line. If you are buying on the Missouri side, you benefit from a lack of rent control. This is a massive advantage for investors planning reliable long-term revenue growth.
Section 2. 4 steps to turnkey.
Here are the 4 standard steps to turnkey investing. Step 1 is to identify a property or a provider. This very often happens in strong cash flow neighborhoods around Kansas City like Independence, Raytown, or Grandview. Step 2 is where you verify the renovation and the projected rent. Step 3 is closing the deal, frequently with a tenant already in place. And finally, Step 4 is handing off the operations to a property manager who collects the rent and handles all the maintenance. The real appeal here is speed and distance. You can realistically build a Kansas City rental portfolio from a completely different state without ever showing a unit yourself.
Section 3. Avoiding costly turnkey mistakes.
Now, a provider will often claim they have completed a perfect cosmetic flip. It looks absolutely flawless in the photos, right? But the investor reality is often hidden capital expenditures. A fresh coat of paint and some new floors can easily hide an old roof, a failing HVAC system, or deferred plumbing. Imagine buying a cash-flowing property only to have the furnace literally fail in month 2. Your annual cash flow is instantly wiped out. You absolutely must always get an independent inspection to verify the true condition beneath those cosmetics.
Here is another really dangerous trap. The provider presents a high projected rent on a beautiful pro forma spreadsheet, but the investor reality demands real market comps. If the provider's projected rent is even slightly above the actual market rent for that precise neighborhood, your entire return calculation falls apart. Never accept a provider's rent number at face value. Always demand to see actual leased comps.
And let's look at the tenant side of things. The claim is the convenience of a turnkey tenant already in place, but the reality is the huge risk of an inherited bad tenant. A property sold with a tenant is literally only as good as the screening process that put them there. You have to confirm that the tenant was properly screened and, most importantly, that they are actually current on their rent payments before you close.
Finally, we have the management setup. Providers often push the convenience of their in-house management arm, but you really have to be aware of captive management risk. Some turnkey providers will try to steer you to their own management company, regardless of their actual operational quality. A captive management arm might just have less incentive to perform at a high level compared to an independent operator who has to earn your business every single month.
Section 4. Verifying your turnkey deal. Okay, so this is your mandatory due diligence checklist. You must treat this like any other purchase, just with the rehab already completed. Get an independent home inspection. Verify the rent against actual leased comps. Confirm the tenant's payment history. Vet your property management completely separately from the seller. And lastly, skip the shiny sales brochure and run the numbers yourself using realistic vacancy rates and maintenance reserves. A good independent property manager can actually help give you an honest read on all of these numbers before you buy.
Section 5. Partnering for long-term success.
This is exactly where Alpine Property Management Kansas City comes into the picture. They are an authoritative, independent partner designed to help you operate remote rentals the right way. If you need someone to give you an honest read on a deal and run it properly after you buy, this is absolutely the caliber of independent team you want on your side.
2013. Alpine has been deeply rooted in the Kansas City market since 2013. That is well over a decade of continuous local market experience. They have navigated entirely different market cycles and truly understand the highly specific nuances of the local neighborhoods.
And this builds right into their operational scale. They currently have over 250 homes under management. That size indicates robust, tested systems. They know exactly how to handle maintenance at scale, tenant communication at scale, and accounting at scale.
But scale is only valuable if the performance matches it. A 96% occupancy rate means they are highly effective at finding tenants, screening them properly, and keeping units filled so your asset is actively generating revenue.
And honestly, this is the most critical number of all, a 98% rent collection rate. For an investor, this is the ultimate metric for your cash flow. It literally does not matter what the pro forma says if the rent is not actually collected. A 98% collection rate shows a highly reliable, data-driven approach to property management.
So I will leave you with this provocative question. Are you ready to verify your next turnkey deal? Armed with the right data and the right independent team, you can confidently navigate the Kansas City market. For help managing your Kansas City rental property, call Alpine at 816-343-4520 or visit alpinekansascity.com.